Well, US markets have suffered heavy falls today. The S&P 500 down more than 2% to its lowest level since October. Now we're joined by Jason Weisberg of Seaport Securities. Jason, we had some poor figures from Ford and GM today. How does that bode for the rest of the market?
Well, it adds to the game of pile-on that we see in the selling, that it's still carrying on through the emerging market concerns. On the surface, the sales numbers weren't very good. They both Ford and GM, their sales numbers were underneath the estimates, and the assumption is that doesn't bode well for the American consumer, certainly and in part the American economy going forward.
Okay, now we also had poor results for Chinese and US manufacturing today. Is that why we saw such heavy falls across the board in US markets?
Yes, I think that it all is a witch's brew for a sell-off, which we see now, which is at 291. I don't think it's pause for concern. I think any bull market needs a healthy pullback or a correction. I think this fits the bill. As long as it's not accompanied by egregious amounts of volume, I think we're okay. If the volume begins to accelerate with these downward moves, I think then that we might be facing a different problem in terms of the equity sell-off.
Okay, and adding to what you call a witch's brew, the VIX also jumped above 20 today. Is volatility likely to be significantly higher for the period ahead?
I imagine if we continue this short-term downward trend, volatility will accelerate as well. The lower we go, volatility will increase. But again, unless we see some type of volume confirmation, accompanying volume with, a swelling of volume as we move lower, then I don't think it's time to press the panic button. And again, for a long, healthy bull market, we need to see a pullback. When we had a great move last year, and to have the expectation of an up 15 to 20% year to follow up, it might be a little utopian.
Okay, thank you, Jason. That was Jason Weisberg from Seaport Securities, and I'm Jane Searle for TheStreet.